Well, Boohoo, it just keeps getting worse. We look at the stock chart. Even today's recording this video. By the time I edit it, I still hope it's down anyway, but it is down again today, and it's just been an ugly week once again for this stock. And going off the video from last week where I talked about Boohoo and the drop after the earnings, since then, it's just carried on going down and down and down. And the thing is, well, is I made the video last week and I basically said, look, in my opinion, I look at Boohoo now and I look at the valuation and I go, investors are going to start clicking here and think this is the bottom. Like, we've had a massive sell-off. This is an overreaction. Investors might come in and bottom pick this, but it's done the opposite. It's gone down in value, and that's exactly what I mean by I'm a long-term investor. I'm not a short-term investor. I don't like making short-term predictions. Not my thing, because realistically in the short term, it's 50-50. You don't really know where the stock is going to go, and that's the great thing about being a long-term investor, is that in the long term, if you have a company that goes and grows their earnings and revenue, your stock is probably going to move in the right direction. Whereas when it comes to what's going to happen in a week, it's a 50-50 shot. And like I said, I thought personally people look at this stock and think, oh, we'll take a shot here. It's totally the opposite. People have gone, oh, we're down 50%, but yeah, let's just sell out at a loss on this company. And it just shows you don't really know what short-term investors are thinking, and people have looked at Boohoo and the stock and go, yeah, it might be below CV lows, it might be the lowest it's ever been for the last 2 years, but we're going to sell it anyway. And yeah, it is crazy. But as a long-term investor, people are looking at this opportunity, and it's great to see that is happening on the YouTube comments, on the Discord as well. There's always people that look at a stock and go, this stock, Boohoo, that we're talking about today, has just lost 50% of its value. That's a huge amount for in a year's period, from its 52-week high to lose 50% of its value. You'd think, it's massively fallen off a cliff. Is this a buying opportunity, or does it deserve to be here? And people are thinking, is this an overreaction in share price? And it's good to see that is happening. And today we're going to go with Boohoo and that massive 50% drop, and a bit of an update from last week. So yeah, the drop is huge. It's that big now of a drop on Boohoo that we're actually back at CV lows. And that's a crazy thing to put into context. The CV lows is, you look at the CV lows of 2020, March 2020. And some of you guys watching this video might not be involved in the stock market, but I'm sure you're pretty much aware what was going on at the time. The really peak, the lows of the lows of March 2020 was a place where we had the stock market completely collapse. And as well, there was just a lot of panic out there. By then, it kind of got very much aware around the world that we were going into a pandemic. And that pandemic brought uncertainty. We really didn't know that much about what was going on with the virus at the time, and we didn't really have much knowledge of what would happen to the economy. All we really knew what was coming up was that there was going to be a massive shutdown of the economy. The economy would pretty much close down, and as well as that, we had the numbers coming across from places that had this virus a bit longer, that it was going to be cause a massive death rate across a lot of countries. The world in general was absolutely, falling in bits. Economies were falling in bits, and a lot of companies had that hit on their share price. And you're talking here that this company is now back at that peak fear time. That's to put it into perspective. That peak fear of that pandemic arriving, and this stock is back down at that fear levels. And you look and think, since then, you'd think if we've kind of got a lot more knowledge now, you'd think that we are kind of coming out of that pandemic now. You would think that this company would be trading higher, correct? But now it's back down there. So you're looking and thinking there must be something massively wrong for this company to have that kind of fear to go back down to that sort of share price. And if you kind of ignore that, you go back to the last point the share price was at the start of 2019. That's quite a while ago. We were nearly talking about 2.5 years of share price gains wiped out on this stock. That is to kind of put into context how much this has fallen off a cliff. And that's what people are looking at. They're thinking, at that sort of share price level, there must be something that's totally wiped this company out to be back down at that valuations. Now, realistically, the stock has had a bit of a tough 2021, but mostly a lot of that comes down to earnings. Earnings was a recent drop in particular for Boohoo. Now, in my opinion, the earnings were strong. They were very strong. And you look at the earnings and you think, well, what has caused the drop? It came off these. But then you look at the drop of earnings, and in my opinion, I look at the earnings and go, there were strong earnings. And that's the kind of crazy thing. In the earnings in particular, there was two standout points here. There was a point of, first of all, building for the future. Boohoo has been that amazing over the last kind of since it's been founded, but especially over the last few years, and it's grown its profit, it's grown its revenue, that it was in a position to have a strong balance sheet. And because it had such a strong balance sheet, what it's gone with and done with that balance sheet is that it's looked over the last kind of 12 months and gone, okay, can we add any brands in here that will help us grow in the future? And it's identified a few brands that are struggling, gone and bought them, and it thinks it can add it into its collection and turn them into very good brands. And it's looked at the likes of Debenhams. It's bought Debenhams. Debenhams was a very good purchase. They got it at a really good price, paid it all in cash because they had an amazing balance sheet, and they've turned it into an online business model only. That business also means that instead of being Boohoo, which is normally treated as a fast fashion, a bit of a brand for 18 to 24-year-olds, gets an established brand like Debenhams, and also the age ranges for Boohoo have now completely opened up. And as well as that, for buying Debenhams, it has gone from being just a clothing company now to being a makeup company as well. So you now have two little income streams that happen from Boohoo from this purchase. And for me, that purchase is brilliant. It's one of the best buyouts I've probably seen in the stock market for a long time, especially when you consider the price they paid for it. And obviously that's hurt the profit a little bit, and integrating that into what they have at the moment. And that's something that isn't going to come in this year. It's going to come in for 2022, 2023, 2024. And they're building for the future. And in my opinion, you look at what happened with revenue. Revenue was strong. We knew it was going to be 20% revenue growth that was a little bit slower than last year. But last year, the high streets all closed. Everyone went online. So they're very, very hard comps to beat. They're a company that grow at 30-35% revenue growth. And last year they jumped to something like 55. We know that's not a normal year, and we know there was a bit of growth pulled forward. And when you consider they still grew a very good rate, and then you put that over a 2-year period, they're still growing at a very healthy rate that they would normally do. So the revenue was strong. The investments they made were strong, even though it hurt them a little bit how they're kind of integrating that into the whole platform. And also they're kind of tackling one of the big issues that Boohoo have had over the last kind of year, which has been the whole Leicester factory situation. The Leicester factory situation is why you could argue that I would say the share price hasn't done well, but there has been times where the share price has jumped up in value. And with that share price jumping up in value, there has been times where I have made good money on Boohoo stock in the last year. But more than being a volatile stock, we want this more probably to be a consistent stock going up. And the reason why Boohoo had a lot of dips last year was because of the Leicester factory situation. What it did in that time is it's brought Brian Leveson in. Brian Leveson has kind of tried to help them make sure they're not linked to anything like that, and they've made investments on supply chain, their own facility in Leicester, their fulfillment centres, expanding for the US growth, the EU growth, and basically this has been a year where there's sales have been that strong. It's now capitalised and gone, right, let's build for the next kind of 5 years, expanding, making sure that we can meet demand, make sure that we have none of these problems that have affected the share price the last few years. And it was, for me, an earnings which was building for the future. And for some reason, because it invested back into the company, the share price had a bad reaction off that. And I just thought that it's better than a company, we see so many companies that stay stagnant and go, you know what, we won't invest in the company, we'll just keep that profit and revenue growing up. And then within 5 years, people go, but now you're struggling to grow. Boohoo have done the opposite and put that investment back in, and it's it will show in the next few years. And the other big thing was the shipping side of it. The shipping, obviously, I think they said was 28 million extra than normal, and that's a massive amount. That's a massive amount, especially for a company that I think makes about 100 million in profit. To have 28 million in shipping costs go up and take out your profit is huge. Now, obviously, that is one of the big things that hurt the profit side of it. And we know this is going on right now. You know, if you go anywhere, you know there's a lot of supply chain issues around, especially the UK at the moment, but also around the world as well. There's a lot of shipping issues, and that comes down to, do you think this problem here is something that will carry on for the next 5 years? If you think, okay, the shipping issue will calm down a little bit in the next kind of couple of months, which Boohoo actually came on to say that we think that it will calm down, then that's not a problem. As well as that, you know, the thing as well is that you can also increase your product fees by a little bit as well to cover the costs as well. So there's that option as well. And even if the shipping drops and the product's prices just go up a little bit, then that will balance itself out. And Boohoo even came out to say this is something that we expect to kind of sort itself out by next year. So this is something short term for me. And yeah, overall earnings caused the stock to go down, but for me, I saw a quarter of really good building for the future, and sure, there was a little bit of a problem out there, but every company is going to have this problem in the next earnings. So if that's how we're going to, you know, take it, then we're going to see every company that actually has a physical product probably drop from there. But like I said, you know, I look at that as a long-term investor, and do I think that's going to be a problem for the next 2 to 5 years? No, I think that will sort itself out. And yeah, I mean, that was obviously the big drop recently, but as well as that, you know, the stock has been downtrending for this year and had the massive drop in earnings, and it's downtrended again, and it's just one of those beaten down dogs at the moment. And I look at what is kind of going on and the valuation it's at, and I look at a company like Boohoo and I go, where do I see Boohoo in the next kind of 2 to 5 years? And if I see that company growing earnings and revenue in the next 2 to 5 years, I think the momentum will change on Boohoo, and the share price will do well, and the stock will go up in value. So I look at Boohoo at the moment and thinking, the valuation it's at, the historic lows it's at, and this company is a company that has an amazing balance sheet, and it proved that without going and buying Debenhams cash. There you go. Amazing balance sheet, the growth on it. You know, this is a company that is massively sold off, and it's still going to be growing at like 30% revenue rate, and it's still going to move profit in the right direction. It's like at a forward P of 19. I look at this company and think, you know what? Sure, there might be a little few hiccups in the short term with this, and people might have overreacted off building for the future, because I thought that there was some great information in there. But I look at a company like Boohoo and I think, you know, where's this company going to be in the next 2 to 5 years? And I can only see them growing profit and revenue still. And when they do that, especially at the moment, I look at this stock and go, you know, I can't even remember what it's at today. I think it's like a £1.80 stock. I'm already thinking Boohoo, for me, is easily a £3 stock. Like Boohoo today should be a £3 stock. So I'm looking at Boohoo going, I'm already picking a company up, in my opinion, that should be higher. And then I consider where they're going to be in the next 2 to 5 years. I think Boohoo will get to the point in the next 2 to 5 years where they are a £5-6 stock. And that's like a bear case. I think they could go even higher, because this is a great company. You talk about a company here with, you know, amazing balance sheet, good profit growth, great revenue growth. Look at Revolve, for example. A Revolve at the moment is something like a forward P of like 56, and Boohoo is like a 19 right now, which is absolutely bonkers. So yeah, at the moment I'm just seeing this is probably the best UK stock for me right now to be buying. I've considered even selling Greg's to buy more, trimming S4 Capital buy more. I just think there's a lot of upside in here, because like I say, it's a company for me that is already should be a £3 stock, now at like £1.80. So it's one of those things that I know people always find this really crazy, but when a stock I love just keeps going down and down and down, I just love it. I get really excited, because every time it goes down, I just keep buying, and my upside is staying the same, and I'm going to make more money. So I know a few people, when these sort of things happen, they get a little bit nervous with seeing a stock they own just keep going down and down. But for me, it's great, because like I think long term, 2 to 5 years, I'm just going to make more and more money on this. And yeah, for me, it is the standout buying stock to buy on the UK stock market right now. And just in general, like I've considered making this my biggest position quite a few times on the UK scene right now. So yeah, for you guys who wanted a bit of a Boohoo update, I hope that video was useful. If it was, hit the like button. If you're new, subscribe, and I'll see you next video.